Hello, welcome back. Today we are starting on a new topic, which is trading section and its implications. Not many people will tell you about trading section. When I did my crypto training, I wasn't taught about trading section, but after a while, I discovered that there is difference. For instance, that cryptocurrency, yes, is 24 hours open, right? But you find out that towards Monday, Tuesday, Wednesday, and then coming to Thursday, Friday, Saturday, Sunday, the market will start rolling down, right? On Sunday, find out that the market will be most of the asset will be um, dipping, right, or correcting, right, or retracing, right. So I found out that okay, that the best time to buy the dips are on Sunday, right, because on Sunday most of the market fell. Most of the price of the asset usually fell, as in. So as I studied the market, I discovered that not just that the price of the market fell on Sunday and started rising on Tuesday, on Monday, and then gets to a peak at Wednesday, then before it starts retracing. Although this is not constant, but at a larger extent, this is how the market price action behaves. So when I started studying more, and I discovered also that during the Sunday night, there is always a rapid drop of price from 130 towards to 430. So I then have to go to study more about why such a reaction, right? And also I discovered also that whenever American workers are being paid, the dates American workers are being paid, there's always a sharp rise in cryptocurrency price, because people tend to take a part of their payday to of their salary to invest in cryptocurrency, thus increasing the demand of the asset. So this is why I have to create this course in order to bring this to your notice, so that you pay attention, because this will help you to plan your trading, right? If you want to be effective, if you want to be a successful trader or a crypto investor, you must always pay attention to trading section, right? Although, unlike stock trading, commodity, cryptocurrency is traded is not traded on a regulated market, and because of that, there are different phases of trading section. So as we go deeper into this course, you will discover these phases. So without wasting much time, let's dive into the course. So hello of you, my name is Adam Shinobi, and we can link me up on any of my social media handle, and if you can also subscribe to our YouTube channel. So what is trading section? Trading section is a period of time when markets are open for trading activities. We have trading section in every financial market. There is a trading section, whether it's forex, whether it is stock market, whether it's commodity, whether it's option, future. There is a trading a period of time. Even in our local market, we have a time where the market opens and when the market closes. For instance, in Nigeria, most of the market in Lagos opens around 8 o'clock and closes around 5:30. That is open market. So every of the market have its opening and closing time. But because cryptocurrency is traded on unregulated or decentralized exchange, like when you talk about stock market, New York stock market or American stock market, the only place the market, the only market that opens in stock market is located in New York. Well, we might have heard about Wall Street, right? So that's a centralized market, right? Also, we have London Exchange, we have Tokyo, and we have Chinese. All these are centralized market for stock trading, and they have time they open, and whenever they open, they ring a bell and all those activities, right? So, but cryptocurrency doesn't have a centralized exchange. We have the Binance, we have the Coinbase, we have the KuCoin, we have many exchange where you can trade cryptocurrency. And the market of normal financial market like stock market and all that, they have also what we call the peak time, the peak period. Like forex, you hear about Eastern Standard Time. Those times when I was learning how to trade forex, I was told that the best time to enter into the market is by 3 p.m. Right? That's around 9 a.m. Eastern Standard Time. That is American time. So, and because the activities of the market is at its peak, so also this applies to cryptocurrency. Though there is no centralized exchange, but there's impact of different financial world centers. The impact creates what we have as the peak period, as the after hour trade, and the pre-market open. All those things that you can equally see in a stock market, you can equally see it in a cryptocurrency market, though cryptocurrency market is 24 hours open. So note, trading section hour can vary by asset class. Like this is not a kind of, when you talk about trading section, it's not kind of fixed, right? The activities changes, but on a normal basis, you need to establish a common perspective about trading section, right? So moving forward, we will look at the phases of trading section. So we have 3 phases of trading section. We have the peak period, we have the pre-market period, we have the after hour period, right? The peak period, this is the trading hour that usually drive the highest trade volume in each region, right? So the peak period is when you witness a high level of momentum. You will see a high level of volatility. You will see a greater if the buying, you will see a very strong or a strong trade pressure, as in the strength of the market, the strength of the price movement will be so strong, right? So this is the best time to trade, because you can put a trade and make out money before the market move into the after hour period. So the key peak hours you should pay attention is a peak hour, the key peak hour that you should pay attention. Then we have the pre-market period, right? The pre-market period is the period of trading activity that occurs before the peak section. During this peak period, the pre-market, this is time you do your trade study. This is where you study your chart. So the essence of paying attention, the essence of discussing the trading section is to know how to structure your trading activities. Like normally I wake up around 12 a.m. I start studying this the chart, because that's most times I start studying the chart around 10 p.m. or 9 p.m. because most of the trade setup usually forms at that period. So by 1:30 a.m. I have already set I have already entered the market and hoping to exit the market before after hour period. So pre-market period is the time when you will watch the trading activity to judge the strength and the direction of the market, and in anticipation for the peak trading period. So after pre-market period, you get the peak period. That is the thing. Then after the peak period, you get the after hour period, right? So here in pre-market period is the time you scan the market looking for high probability trade setup. So during the pre-market period is the time you study the market looking for high probability trade setup. In every price action, there is a trade setup that happens. And in trading, we say that always trade in line with trading, as in always trade in line with the trade. If it is bearish trend, don't go against the trend. If it is bearish trend, look for a way to go short. If it is bullish trend, then look for a way to go long, right? So don't trade against the trend, right? Because it will always backfire. So in pre-market period, you start scanning. Okay, later we talk about how to scan the market to discover trade setup, because you have to scan the market. When you scan the market, is when you will discover trade setup. There are some ways that you can make your trade scanning easy. Most times I have to bookmark most assets with big market cap, and that for over the period of time have shown that it usually have a high momentum or a high volatility. I always go and scan to know if there is a trade setup during the pre-market period, right? So pre-market period is the time when you will have to scan the market, and the best time to enter the market. If you are using signal before you use it, pay attention to the trading section and the strength of the market, right? Understanding. Then the next thing is the after hour trading. After hour trading starts after the peak section. During this period, the volume start to decrease. One of the things that after hour is that the volume start to decrease, right? So mostly it likely the selling pressures may increase, right? In after hour period, the selling pressure will increase. The reason is that the buyers who have bought will now start selling off exiting their position, and because of that exit of their position, definitely it will. So in after our period, there is the selling pressure normally increase. So if you enter into the market in after hour, maybe you are escaping and you didn't read the chart, you didn't study the chart, and you jump into the market, there's possibility that the moment you jump into the market, you find out the market start dipping, and you'll be scared, right? So this is the reason why you need to pay attention to this, because whenever after the peak period, most of the institution investors will start exiting their position, and little investors that bought due to FMO, that is fear of missing out, will panic and start selling, and that means most times it will increase the selling pressure. Sometimes it doesn't play out like this. Sometimes the market will move into what we call consolidation or sideways trending, right? So you need to pay attention to trading section. So the next thing we are going to look at is understanding the peak period, right? When we come back, we will discuss about understanding the peak period and why it matters.